Australia's corporate watchdog says the major banks aren't doing enough to help borrowers who are having trouble repaying their loans. The number of people in strife is rising due to high interest rates, rocketing rents and the increasing cost of living. But ASIC says more than a third of people seeking assistance drop out of the process because it's so difficult to get help. It found customers were often required to repeat their stories multiple times to different people, with some lenders having onerous requests for documents that aren't relevant to lending. And many banks didn't follow up, meaning some applicants were denied help because customers didn't know the bank was waiting for information from them. But those who actually did end up getting help were able to secure things like a reduction or deferral of payments. Although ASIC's figures show 40% fell into arrears right after the assistance period ended. The banks have responded to the findings, with the Australian Banking Association Chair, Anna Bligh, saying banks have long-standing arrangements in place to support people facing financial difficulty, including highly experienced and dedicated hardship teams ready to help customers. In any organisation, there is always room for improvement. Banks will consider these findings and work with ASIC on any further ways to support customers. Now, ASIC Commissioner Alan Kirkland says he's incredibly disappointed in the findings.
In some cases, it was clear to us that there's not enough resourcing going into the specialist teams that assist. In other cases, it seemed that banks hadn't really thought about their processes from the consumer perspective. So the processes were designed to be efficient from the purpose of the bank, to manage their lending risk, but they weren't really thinking about the state that somebody might be in when they reach out to say, I'm worried I might not be able to make my repayments because I've lost my job or I'm sick. They're required to consider varying the credit contract. Now, in practice, what that might mean is reducing your repayments for a period of time, or pausing them, or reducing the rate of interest. And the idea is if you can give somebody a bit of a helping hand for a little while until their circumstances improve, then that allows them to stay in control of their finances. We've said to the banks and other lenders we want to see better training, better resourcing, and really to put their staff in a situation where they understand what the individual customer is asking for. So to recognise a call for help at the first opportunity, listen to the individual customer's story and tailor assistance to their circumstances, because every customer is different, and we want every bank to understand that and respond appropriately.
Let's get more on this story now with Alexandra Kelly, Director of Casework at Financial Rights Legal Centre. She joins us in the studio. Alexandra, firstly, to the law, what is it when it comes to banking customers facing hardship and seeking help from the bank?
So customers have a right to vary their contract. And so under the National Consumer Credit Protection Act, when they contact the bank and indicate they are in financial difficulty, the owner shifts to the bank to talk to them about what their hardship might be and take steps to vary their loan contract.
And overall, would you say that help is forthcoming?
It seems to be that you need to know the right words and the right portal in order to get in there, which shouldn't be the case. You should be able to go into any communication method with the bank and say, I'm in difficulty or I can't pay, and they should be responding to you saying and putting you in the right department of hardship, although this report indicates that is not what is happening. Yeah, well, to go to what ASIC has issue with here, that's the corporate regulator not happy with the process and the duration of the help that is offered, because in many cases that not being enough. What do you see in that space? What we see are banks largely just going straight for 3-month pause on repayments. Yeah, right. And they think that will help everyone. And it's not really tailored to individual circumstances. And that has some really compounding effects, because at the end of the 3 months, most consumers can't pay the last 3 months' payments that they've just skipped, and often can't resume their regular repayments. And so that can have some real negative consequences to their credit report and make it much worse for them. And are the banks quite similar, or are some much better than others in their response? It can be very varied, and some banks can be good for some and then not for others, and so you get a lot of individual variation between the lender themselves as well as incredible variation across the banks. And looking at the circumstances of customers, I mean, we've seen from the statistics many of them have been victims of family violence.
Are these circumstances being properly understood and taken into account here?
Again, incredibly varied. You'll have some banks that will work incredibly hard in very challenging circumstances to assist a victim survivor. And then in other cases, it could go terribly badly, often asking incredibly insensitive questions around asking for the perpetrator's agreement to a hardship variation, inappropriate information being shared with the perpetrator, even though that hardship has been, the domestic violence and the hardship has been flagged.
And, I mean, this process, it should be good for customers and banks to address this. What would you like to see change here?
I'd really like to see banks invest in the initial call and that follow-up. What I think is evident is that there can be individual good calls, but that hardship journey is not being appropriately or closely monitored, with the right check-ins with customers, because sometimes more than one hardship can occur. And so you might be on track and then something might derail a customer. And so banks need to be prepared to be flexible. They also need to be carrying through that entire consumer journey.
Alexandra Kelly, Director of Casework at Financial Rights Legal Centre, thank you for coming in.